So let me ask you something. Are you one of the millions of people in the UK who accidentally overpaid on their tax last year? You might just be sitting there waiting for a refund from HMRC that, well, might never show up on its own. If you've ever glanced at your payslip and had that nagging feeling that something isn't quite right, then you are in exactly the right place. We are about to break down why that might be happening and, crucially, what you can do about it.
And let's get right into it. All the insights we're sharing today come directly from the tax experts at My Tax Accountant. They see the stuff day in, day out. So we're going to pull back the curtain on what's really going on with UK tax refunds so you know exactly where you stand.
All right, first things first. Let's tackle the single biggest myth out there, the one that's costing UK taxpayers a fortune every single year. We're talking about the idea of the automatic tax refund.
And here it is, the one thing you absolutely need to know. For years, pretty much all of us assumed that if we overpay tax through our job, under the PAYE system, HMRC would just spot the error and pop the money back in our account. Well, for most of us, that's just not how it works anymore. The rules of the game have completely changed.
And look, this isn't just a rumor. It's a huge shift in how things are done. This quote from the UK Tax Handbook for 2025/26 says it all. The system is no longer a passive one. Now, HMRC might still figure out they owe you money, but here's the kicker. The responsibility for getting that cash back has been put squarely on your shoulders. You have to go and claim it.
So you're probably wondering, how does this even happen? Why are so many of us paying too much tax to begin with? Let's dig into the most common reasons, because honestly, spotting the cause is the first step to getting that money back where it belongs.
Okay, the number one culprit, by a long shot, is any kind of change in your employment. Started a new job, only worked for a few months of the tax year, juggling more than one job. All of these can really mess up your tax code. Let's take our example, Raj. He's a graphic designer in London, and he decides to pick up some freelance work on the side through a second part-time job. His new employer, without a P45, puts him on a BR, or basic rate tax code. This is a classic trap. It means he's paying 20% tax on every single penny he earns there without any of his tax-free allowance. Ouch.
But that's not all. Here's where so many people get caught out. The emergency tax code. It's like a silent fief of your take-home pay when you start a new job. If your new boss doesn't have your P45 from your last job, they're forced to put you on an emergency code. And while this gives you a personal allowance, it doesn't account for any tax you've already paid that year. The result? You often end up overpaying, sometimes by a lot, in those first few payslips.
And listen, we're not talking about pocket change here. For a typical employee caught in one of these traps, the average overpayment is somewhere between £300 and £500. Just think about what that is for a second. That's a car payment, your entire weekly food shop, maybe a bill you've been stressing about. It is your money, and you're basically giving HMRC an interest-free loan.
Now here's what's really fascinating about these tax bans. It's what they don't show you. See, these thresholds, they've been frozen for years, so as our wages slowly creep up to try and keep pace with the cost of living, more and more of us are being silently dragged into higher tax brackets. It's a thing called fiscal drag, and it means your pay rise doesn't feel as great as it should, and it massively increases the chances your tax code is wrong and you're overpaying.
Okay, so we've established it's not automatic anymore. So what does the new process actually look like? Let's walk through exactly what happens when HMRC does spot that you've paid too much.
Right. You might get a letter through your door called a P800. This is a really key document. I want you to think of it as HMRC's end-of-year report card on your tax. But I need to be absolutely crystal clear about this. A P800 is not a check. It is not a refund. It is simply a piece of paper telling you that you might be owed some money. This here is the new journey your money takes. So first, between about June and November, HMRC does its big annual calculation. Step 2, if their system flags that you've overpaid, they'll send out that P800 notice we just talked about. Now pay attention, because Step 3 is the most important part. Absolutely nothing happens next until you go online to your government gateway account and actively claim your refund. Only after you've done that does Step 4 happen. The money finally gets paid into your bank. The days of a surprise check landing on the doormat are pretty much over.
Now, I know this all sounds a bit complicated, but it really doesn't have to be. You're actually in the driver's seat more than you might think. So, how can you take control and check your own tax situation without just waiting for a letter that might not even arrive? Stay with me here. This next simple check could genuinely put hundreds of pounds back into your pocket.
Okay, here's a pro tip. This is probably the single most useful thing you can do for your personal finances this year. Go and set up your HMRC personal tax account online. It's free, it's totally secure, and it's basically the dashboard for your entire tax life. In there, you can see your tax code, you can update your employment details, and most importantly, you can claim any refund you're owed. Seriously, it takes 10 minutes. Go to it tonight.
And once you're inside your account, you'll see your tax code. It might just look like a random jumble of letters and numbers, but it tells a story about your money. As this table shows, 1257L is the standard one for most people with one job, so that's usually fine. But if you see a BR for a basic rate, or a 0T, meaning you're getting no tax-free allowance at all, well, that's when the alarm bells should start ringing. And a K code, which is often for things like company cars, can lead to huge overpayments if it's based on old info.
Now, for some people, the overpayments we're talking about can be much bigger than a few hundred quid. If you're self-employed, a higher-earning parent, or a company director, the financial stakes are a whole lot higher. Let's quickly look at some of these more complex situations.
If you're self-employed, I'm sure you're familiar with payments on account. You know, these are the advance payments HMRC asks for towards your next tax bill, and they're based on what you earned last year. But what happens if you have a quieter year? Maybe a big client leaves you. You can end up overpaying a huge amount of tax based on income you never actually made. Now, you can apply to reduce your payments on account if your income has dropped. And by doing that correctly, you could potentially keep an average of £1,900 in your bank account where it belongs, instead of it sitting with HMRC. For any small business, that is a massive boost to your cash flow. Oh, this is a big one. It's a stealth tax that catches so many families by surprise. Basically, if one partner in a household earns over £60,000 and you claim child benefit, you have to start paying some of it back through the tax system. It's called the High-Income Child Benefit Charge, and it's notorious for not being applied correctly in tax codes, leading to a lot of confusion and, you guessed it, overpayments.
Getting this sorted out properly by having HMRC adjust your tax code instead of you paying it all back in a lump sum can mean a cash flow saving of around £2,300 a year for a family with 2 children. I mean, that is a real game changer for any family budget.
And what about for company directors? Let's go back to our friend Raj, who's now set up his own successful design agency. For him, being smart about how he pays himself is absolutely key. By taking a small, tax-efficient salary and the rest of his income as dividends, he can avoid overpaying on things like national insurance and income tax. It really is all about getting the structure right from the very beginning.
Phew, we've covered a lot of ground there. We've busted the automatic refund myth, we've looked at the common traps that lead to overpayments, and we've explored how you can start to take back control. So, what's your game plan? What should you do right after this?
Okay, let's boil it all down to the essentials. So the crucial point is you have to be proactive. Don't assume anything is automatic anymore. Your mission, should you choose to accept it, is to log into that personal tax account and check your tax code. If you're self-employed, make sure your payments on account are realistic for this year. And please, if you think something looks wrong, don't just wait for a letter. Act on it. The key is to get that money back in your pocket, not HMRC's.
Look, if you've listened to all this and you're feeling a bit overwhelmed, or you just know that your tax situation is more complicated, please don't try to struggle through it alone. That's exactly what professionals are for. For expert help sorting out a tax refund or any other tax issues for that matter, you can always reach out to the team at My Tax Accountant.
And just a quick final note from us. The information we've shared is for general guidance to help you understand the landscape. Because everyone's financial situation is unique, we always recommend consulting with a professional tax expert before you make any big decisions. But the biggest takeaway is this: it's your money. Isn't it about time you made sure you're keeping every penny you're entitled to?